Disclaimer: the insights and opinions shared on this show are for educational and entertainment purposes only. Before making any financial decisions, we recommend consulting with a qualified professional to better understand your unique financial situation. Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege, it's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go.
Welcome to Investors Playbook, episode 22. I'm Cornell Rowan.
And I'm Deshaun Edwards. And before we get into today's episode, we got a couple of announcements for you guys. Last week, we did have our first successful virtual event. We discussed automation and the ability to automate your money and ease your money stresses. So appreciate everyone that showed up. Your input was greatly appreciated. Yeah, just looking forward to do more of those. This is going to be a monthly thing that we do where we go and give content virtually well, not in person, but live. And it's going to happen once a month. So if you missed if you missed this month, so make sure you tune in next month for sure. We got
And the best thing about it is, it's free, and we love to have you join the conversation for sure.
Absolutely.
Yeah. And another announcement is our next one is February 28th. So it'll be at the same time, which is 4 o'clock PST, 7 o'clock EST.
Yep.
So make sure you come out. It'll be posted on Eventbrite by the end of today. And yeah, make sure y'all come out.
For sure. For sure, for sure. All right. But yeah, so those are the announcements. What are we talking about today, Cornell?
Today, we are talking about earnings. We're talking about earnings because today, well, this week is a big week, right?
Yeah. Yeah.
So last week, I know Tesla had its earnings, and there was a huge drop in the stock price. This week, we have some more heavy hitters. We have Microsoft, Amazon, AMD, Apple. So I'm really looking forward to what's going to happen, especially because I'm investing in most of these companies that I just named.
Right. Right.
I'm excited to see what they do.
Yeah, definitely gonna be a huge tech week for sure. Just before we even dive into the specifics of the different companies and their earnings, let's talk about what exactly earnings are, right? Like EPS, a rap sheet, and then kind of talk about some of the why it's important to look at earnings, right? Because I know earnings reports, these are something that happen on a quarterly basis, right? 4 times a year, a company delivers its earnings report, which is basically the financial health of the company, essentially. But yeah, I know. Let's go a bit deeper into what earnings reports are, though.
So earnings
Mhm.
is basically just like how it is for us. What we earn is the income after tax. It's the company's profit, right, during a certain period of time. So, of
Mhm.
course, as Deshaun said, these are split up into 4 quarters throughout the fiscal year. A higher recurring earnings indicates better financial performance, and
Right.
it's usually that it affects the stock in a positive way.
Mhm.
This is essential for any investor that's thinking about investing into a company. Because if a company is not profitable, why are you investing in it?
Yeah. Facts. Yeah, and I mean, because it happens quarterly, you can always look at previous earnings reports, right? They keep records of those. So making sure that when you are looking at or you're looking at the expected earning results of a company, always go back and see what they did previously. Go back and see what they did last quarter, the previous 4 quarters, just to get a gauge on if this upcoming earnings report is going to do positive or negative, or compare it to what was done previously. Um, yeah, I was gonna say also that a lot of people gauge how they're gonna play their, like, just option plays a lot too, right? On earnings reports. Um, because like Cornell mentioned, the Tesla earnings report was last week. And a lot of times, as soon as the earning report comes out, it is a huge shift in the price of that stock. It's a pretty much like a huge driving factor. Netflix had its earnings report last week, and the price of the stock went up almost $100, like almost. Tesla had its earnings report, and the price of that stock went down almost like what, 20, $30. So our earnings report can like really change and shift the price of a stock very greatly and very rapidly too. So yeah, definitely make sure that you are staying on top of the earnings that are coming out, because if you're looking at a particular company, it could very much so shift very drastically, like just in a day or 2 days.
Right. So
Mhm.
while earnings is important for all investors, because even long term, you want to make sure that you're investing in a company that's profitable over time, over a long period of time.
Right.
For, as Deshaun said, for day traders, people that are playing options or people that are swing trading, earnings is especially important because this is where the volatility is the highest.
Exactly.
Okay, so when the earnings hits, when the earning report hits, and it goes a certain way, as Deshaun said, it's going to shoot up or it's going to shoot down.
Hmm.
Sometimes it can be a little confusing because it's like you'll know a business is going to beat in earnings, which means that they're going to have greater earnings than what was expected. They're going to be above that. Sometimes they will do as you thought, but the stock will still tumble,
Yeah.
and you can lose money. So day trading is always more risky than um than long-term trading. But of course, with great risk comes great reward. But you always want to be careful when it comes, because just because you have a strong feeling something will happen doesn't mean it's going to happen.
Yeah.
And remember, over 90% of day traders are not profitable. So always remember that, and just be careful with your money.
Hmm. Definitely. Don't bank on an earnings report, like having that be your savior. Because I mean, being a day trader, right? Like someone who used to day trade a lot with options, earnings report will look well. The expectation would look good. The actual earnings report will be good, but the stock still does not. and it's almost like playing favorites. You know what I mean? It doesn't matter how good sometimes the stock's health is financially. If the overall sentiment is sell today, that's just what happens. So you really, like you said, man, you really got to be careful when it comes to earnings reports. But aside from the day trading aspect of it, an earnings report is very important for any kind of investor, any kind of trader, because again, it tells you the financial health of that company. It mentions like the revenue, the amount of debt that the company has. It talks about future expectations, right? Like that is a huge factor as well. What the company is expected to do in the next quarter, which can also drive the price of the stock. So all these things matter when it comes to a company that you're investing in, because ultimately you are putting your money in this company. You should know how well the company is doing financially. You should want to know if they have a mountain of debt that they need to tackle, if they're being profitable. Um, so yeah, if earnings report comes out quarterly, definitely just like pay up to it, pay attention to it, especially if it's a company that you're heavily invested in, because it could give you some vital information on the companies that you are hoping to do well in, because you're putting your money in it. It's good to know as much information as possible about these
And,
companies.
and remember, companies that are public are
Hmm.
required by law in the U.S. to put out these earnings. So it's the way you want to think of it is kind of like a report card
Yeah.
for yeah, kind of like a report card
Facts. That's
for
right.
companies. Yeah.
Hmm.
So during these times where they report, it's like, okay, let me see how this company did, just like you would do it a report card. How are they doing in social studies? How are they doing in science? Okay, how are they doing with their revenue? How are they doing? These are the things that you're wanting to know about the business, and
Right.
it tells you how to move forward. So with
Hmm.
earnings, we also have the EPS, which is how is basically measured. All right, so this is EPS stands for earnings per share.
Hmm.
And the way that you get the EPS is the company's net income divided by its outstanding shares. So this is a good way for you to compare different companies, because say two companies make $1 million in net income, right? But
Right.
one company has significantly less shares than the other. So that means that company with the less shares is making more per share in
Hmm.
income.
Right. And typically, when you have a high EPS, it is basically signs of showing that the company is profitable, right? Like the value of the EPS, earnings per share, the value of each share divided by the amount of the shares. Is that what you said? I want to make sure I heard it right.
The net income divided by the number of outstanding shares.
The net income of the company divided by the amount of outstanding shares. Okay. So, I'm just trying to see. Normally, EPS, high EPS means positive, right? Like the company's doing well. Low
Right.
EPS, okay,
Right.
gotcha. High income and a low amount of outstanding shares, or the value of each share is higher, basically. All right, that makes sense.
Yeah.
Man, what are some of the other things that people, I guess, should look for when it comes to an earnings sheet outside of the EPS? Are there anything in particular, or no? Mainly the EPS.
Yeah, that pretty much sums it up. That gives you a broad, like the umbrella of how that company is doing.
Okay. All right. So yeah, so that's basically how an earnings sheet, an earnings report is read, right? Basically defining how well a company is doing. But Cornell, I want to ask you, with these earnings that are coming up this week, how are you feeling about some of the companies that are supposed to be reporting earnings this week? Like you mentioned, we got Microsoft coming out, we got Apple, we have Amazon, we have AMD. Nvidia is not this week, I don't think. No, Nvidia is not this week.
No, I didn't see that.
So this is like a huge tech week, man. Like a lot of, I think Meta is this week as well. Wednesday.
Gotcha.
Um, mhm. Meta, Apple, Microsoft, they're all on the same day. Amazon is Thursday. It's a lot though. It's a lot happening this week, right?
Gotcha. Yeah.
Yeah.
I'm I'm definitely looking forward to it. I have a lot of my portfolio is in tech. Of course, it's the fastest growing sector
Yep. Yep.
right now. The QQQs and everything.
Hmm.
That was the last thing that I put into my Roth. I know I spoke about that on an earlier podcast. Yeah, so with AI, I feel like it's about to boom, man. I feel like
Yeah.
this year is about to be amazing for me and those companies
Hmm.
for sure. Yeah, man, I'm excited. I'm not gonna lie. I feel like this year is going to be life changing, groundbreaking. Like
Yeah.
it's amazing.
And like the companies have just been hitting record highs. I think the S&P 500 hit an all-time high last week again.
Yeah,
Um, and yeah, it's just looking very positive for a lot of companies. But of course, not all, like you said, not all tech is just going to boom. You have certain companies that, if you look at the earnings report, it sometimes does not necessarily make sense. Like with Tesla having a huge market cap, um, and that partly being the reason why once the earnings did come out, we saw that drop in stock price. Because if you did the research previously, and I know we talked about this in the previous episode where we said this Tesla rap sheet doesn't make sense. How is Tesla, like, why is the price of this stock so high when the market cap is where it's at. And then come earnings, Tesla drops. You know what I mean? So
And
go ahead.
And I wanted to just go back, so I pulled up the earnings calendar. I just wanted to tell people the exact dates because I know we
Yep,
were kind of throwing it out there on from the top of our head.
go
And
for it.
I'm just going to talk about the big names. So
Hmm.
we got on Tuesday, January 30th, we have Microsoft, we have Google, we have AMD. Also, Pfizer and UPS are coming out along with Starbucks. So I know Microsoft. That's one of. I think that's like my biggest holding
Yeah,
within my whole portfolio. So I am. Tuesday is gonna be big for me, man. I'm gonna be watching my phone like, yeah. So also Wednesday we have Boeing, we have Qualcomm, and we have Mastercard. Those are coming out
nice.
on Wednesday.
Nice.
Thursday, we have not April. We have Apple, Amazon, Meta, and Shell. Those are coming out. So that's going to be a big day. Also, I'm a big holder of Apple and
Hmm.
Amazon. So that's going to be pretty good. And on Friday we have Exxon and Chevron. So those are the big names that I'm seeing on the calendar right now.
Nice. So AMD, you said was Tuesday, right?
AMD is Tuesday, along with Google and Microsoft. Yes, sir.
Tuesday is gonna be huge, man.
It's gonna be
AMD
crazy.
and AMD, Apple, and Amazon are the three that I'm gonna be like looking at. Those are the three that I have a lot of money in. So
Yeah.
yeah, I think that Tuesday Tuesday is really gonna just lead the charge with those huge names. And I feel like the rest of the week will just follow suit. We'll see.
Yeah.
But
Yeah.
yeah, I think
I'm a big player in AMD also, man. Man, yeah, this is gonna be huge for sure.
AMD is gonna do really well, I think. Yeah, it's gonna be a good week, man. So um yeah, earnings is again a huge factor. Like you mentioned, it's a report card comes out quarterly. Um and it's weird because like do you keep up with earnings like prior to the earnings report like the week before, or is it just kind of like you recognize it comes out when like the week, like when do you know when do you start looking at when the report is going to come out, and then also do you check expectations like what people are expecting the earnings to do?
I do not check expectations. I'm not that deep into it. You know, mostly I'm a long-term trader, so I see what actually happened. I feel
Right.
like the expected earnings is more for people that are trying to day trade.
I agree i agree with you 100% because they're basing their pretty much daily or weekly play off of an earnings report that's going to happen that same week. Because I
Yep.
know a lot of times when you are like, for example, trading options, um, when the earnings, when a company is giving their earnings that week, the price of the option is a lot more expensive than on a regular week, right? Like they call it the premium, right? So you're paying for the expected um, the expectation for the stock to go up or go down. So they basically pump that into the price of the option that you're about to purchase. Um, that's why I was asking that because a lot of times people will purchase stocks or purchase options the week of the stock does well on, let's say for example Tuesday, you purchase a AMD option that's going to expire on Friday. The stock does well, the price goes up, you don't make much money because as soon as the earning report happens, they almost like correct the price of the option. So
Bro,
it's
that's happened to me before. And this is
yeah,
another reason why you have to be careful with your
yeah.
day trading, especially when it comes to options, man. Because there's certain factors in it that aren't very straightforward.
Mm-mm,
So it's not as simple as okay, you purchase a call and you're expecting it to go to this strike price, and if it goes, you automatically get paid. It's not. It's really not that simple. There
nah.
have been times where I did purchase a say a call, right, or and for the people that aren't aware of the word, so basically a call means that you're expecting the stock to go up.
Yeah.
So I'm purchasing a call, and then the earnings goes exactly how I thought it was going to go, and I lose money. You see what I'm
Hmm.
saying? So it's crazy. So you have to be careful. You
Yeah.
definitely got to be careful, and just make sure you know exactly what's going on, what your risk is, because you don't want to risk something that you can't afford to risk, that you can't afford to
Hmm.
lose.
Right.
Because if you lose it, there's no call and be like, "Oh, no, I made a mistake.
It's
Can
over
I get my
with.
money back, please? I need a do over." Nah,
It's
it's a
over
wrap.
with.
It's a wrap. Like
Yeah.
it's done.
It's
So just
done. Yeah.
just yeah, keep that in mind. This Yeah, you can lose your money, especially with
Hmm.
day trading. You can lose it faster than ever. Like you can blink and it's gone. So
Yeah. Look, it
just
can
be careful.
definitely happen, man.
Yeah.
Um, yeah, but yeah, as far as expectations, you're right. That's more like for people who are gonna play those swing quick plays, get in, get out real quick, make some money. But for the long term, expectations probably mean a lot less. You just want to know what the company, like the facts of the company, what
What actually
happens when the
happened?
earnings report drops. Um, yeah, but if it's a company that you're investing in, I guess even if like the earnings report isn't amazing, as long if you're still like just dollar cost averaging or still consistently investing in the company, you just, I mean, I guess for you is just again just watching and making sure that the company is still healthy, right?
Yeah, and making sure that it's not having like back to back to back bad
Yeah.
earnings, because at that point it's like, okay, I
Maybe
need
I should
to
shift gears.
yeah, I need to
Yeah.
make a change. I need to see what they're doing. Like, what is their future site? Like, what's their vision?
Hmm.
Where are they going at this point? Where are they still innovating? Because remember,
Right.
we just had this conversation with Apple. We're not saying that Apple's a bad play right now.
Yeah.
All we're saying is that they're they are becoming a little stale, and now they have people passing them. Well, I can't really say people, but one person passing them, which
Right.
is Microsoft. But that's still a big deal.
It
You see what
is.
I'm saying? Apple has been leading the stock market for a long time now. I'm not
Hmm.
sure how many years off the back of my hand, but like, yeah, Apple has been doing this thing, and for now, and now for Microsoft to overtake them, and I feel like this is going to be
The
a
gap
long
is gonna keep
term
getting
thing.
bigger and bigger. Yeah.
Yeah, because look at
Yeah.
look at everything that Microsoft is doing.
Right. And look at what Apple is, like you said, the staleness of it. The most popular thing Apple just dropped was the glasses, and
Vision
that's
Pro
like
ain't gonna save you, bro.
it's like a really souped up toy. Like
Yeah,
it's not essential, bro.
boy.
It's a toy. It's fun.
It's a toy, and Microsoft is has a heavy stake in AI. This is life changing. This is not a toy. You get what I'm saying?
Yeah. Yeah.
People are using this. People are getting fired over this.
Yeah.
You see what I'm
They
saying?
are
Like,
there. People are losing their jobs. So yeah, something else I'm gonna ask too. So you know how they have actual earning calls? Like you can join on these earning calls. Like you
yes,
said it earlier in the podcast. I mean in the show. Publicly traded companies have to, share their earnings. And it usually happens in the morning. I forgot to say that as well. When it comes to giving the earnings report, it's usually done live. It happens either in the morning or in the evening, right?
yeah,
Market open or
it's
market close.
yeah.
Yeah.
And the terms they
Um,
use are before the bell or after the bell.
right.
Yeah,
Yeah. So, but have you ever like jumped on an earnings call before and
I
listened
have,
in
and it was like I don't belong here.
like, oh well, yeah. So last quarter we did about this much
Man,
in revenue, and
I feel like that's for the people that have like 10% stake in a company and your voting rights actually matter. Cause
I was
I
about to
you see what
say the
I'm
people
saying?
who are like saying no, I don't think we should do that. I own enough to where their vote matters. Yeah, those are the people where they want to like listen in on the earnings call, making sure that the company isn't doing nothing crazy. Um, nah, I just remember like when I used to day trade a lot of the penny stocks back in the day. I'm talking these are tiny companies, tiny pharmaceutical companies who earnings reports, they're just so I mean, when the earnings report happens and I jump on the call, they're just like overly positive. They're like, yeah, we're gonna do this amazing
You
thing.
gotta be.
We
You
have second trials coming out next week, and we know that we're gonna knock it out of the park. And I'm just like, yeah, yeah, eating this shit up. Next week happens, trial fails. The, the stock,
but
the
look,
stock goes from 10 cents to 1 cent. I lose like bruh, it was
but when you're a company talking to your investors, you have to be, because who wants to invest in somebody that's talking timidly like, I don't know how this is gonna go. I don't.
but see, with the bigger companies, they have to do that. They can't essentially like pump up the investor, making them think that they're about to do a mate. Like they got to be realistic with their expectations. A
Well,
lot of times when companies like say we did really good this quarter, but we took on this new venture, we don't know how it's going to work out, so next quarter might be a little shaky. They think when it comes to big companies, your investors are expecting you to be transparent with them. I think because it was pennies that I was trading back then, they didn't care. They were just like, we gonna just tell them that we're doing great and hope that this raises up the stock price.
I
But
got you. So you feel
I
like
think
that
like with go ahead.
softens up the blow, like where it's like, okay, y'all, before this comes out, this is why this looks like that. Is that
I
what
think it builds trust. I think it builds trust with a reputable company.
I feel
But
that?
if you're like, because if you're like Microsoft or Amazon or Apple, and you're just saying we're gonna do amazing non-stop back to back, and you just keep not doing amazing, or you have a down, people are gonna be like, but you said we were gonna do amazing. How come we didn't do amazing? You're gonna start losing trust. So I think transparency with the larger companies where they have like a lot to lose, especially when it comes to people who are heavily invested, they definitely are going to be transparent, and whether it's good, whether it's bad. Because I've seen companies, or I guess I should say, I saw a company do very well on earnings. Like they did their EPS positive, revenue positive, expectation or future sight was not so much. Stock goes down. People say, nah, future sight didn't look good. They don't know what that like next 3 months, and that be the reason. They don't. It sometimes it's not even about what just happened. It's about what they're
About
saying
that
is going to happen in the next 3 months that makes the stock go down.
and I feel like that's the most important thing when it comes to investing is
Mhm.
what's about to happen. Because like if
Exactly.
I'm invested now, I don't care about what happened in the past. I'm trying to figure
That's
out,
already done, bro.
am I about to make money in the future? You know what I'm saying? What's in the past is already done.
Yeah,
Yeah. So
yeah, man. So those earnings calls are interesting. Um, I think I'm gonna find some time to jump on at least one this week just to hear what they talk about.
you should
Yeah,
share once you
yeah, 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 definitely. I think I'm because I don't know which ones open before the bell on Tuesday. It's between AMD and all the other ones you mentioned, but I'm gonna see which one does and probably see what they're talking about.
for sure.
Yeah, bruh.
Let me know,
Man.
man. When you find out you got 10% stake in one of these.
You gonna hear me on the call on the recording, being like, "Oh yeah, this is Deshaun Edwards. I just want to know." Jump on the Apple's tongue, like, so. I just want to know when are you guys gonna do something different with your. Oh man, nah,
That's
earnings are interesting though for sure. Definitely a huge factor when it comes to just understanding a company when you're doing like market analysis. It's good to check a company's earning report. I don't know how far back you want to go, but maybe at least go back like the last 2 quarters and see how they did. It
I
could
say
talk
go
a lot
back.
about the health of a company.
I
Hmm?
say go back to the last few years and see, because
That too, yeah,
yeah,
that
man,
too,
see
that too.
see how they've been doing, man. And also, as Sean said, look at what they have planned in the future. Because if they ain't got nothing planned, it's like it's hard to see where that stock is going, where that company is going. That's your
Exactly.
that's your money. So yeah,
Facts.
protect it at all costs.
Yeah, man. All right, what you think, bro? You think we hit it all?
I think we did, man. I think this was a good one, very informative, and I feel
Yeah,
like a lot of people are gonna learn from this. And
definitely.
as always, I appreciate everyone that is tuning in, supporting us. And yeah, I hope that you learned something from this.
Hmm.
If you like our content, make sure you hit the 5 stars, leave a review, and yeah, thank y'all.
Of course, man. Of course. Thank you again, bro. Tell them where we can find where they can find us too, man.
They can find us at Investors Playbook LLC on both Instagram and YouTube. And also, they can find us on our dope website, www.investorsplaybookllc.com, where you can have a link to all of our socials. And also, we have our merchandise on there. And last
I
but not
see you
least,
repping this shirt, man. It's clean, bro.
you already know you can get you one on investorsplaybookllc.com. And also, we have a link to our book on there. So,
Yeah,
check us out. We're
I love it.
changing lives.
For sure. All right, man. Well, look, a good episode 22
Episode
in the
22
books.
in the
Yes,
books.
sir.
All right, y'all.
All right, man.
Peace.
Peace out.